The Precious Metals Week in Review, June 5th, 2015. Brought to you by Precious Metals International. Volatility remained in all markets as analysts awaited the release of Friday's non-farm payrolls report for May in the U.S. The number of Americans filing initial claims for state unemployment assistance dropped more than expected last week, falling by 8,000 claims to a new seasonally adjusted level of 276,000 claims. The data period included the Memorial Day holiday, but the U.S. Labor Department said that the timing of the holiday had no effect on the data. The previous week's data was revised higher by 2,000 claims. Unemployment claims in the U.S. continue to run below the key 300,000 level that is closely watched by economists. Friday saw the release of the non-farm payrolls report for May in the U.S., and the data was once again conflicting. According to the report, the U.S. economy added 280,000 jobs in May, which was better than the expected addition of 225,000 positions. A deeper look into the numbers once again showed softness in the underlying data. The headline unemployment rate increased to 5.5%, and labor productivity dropped at a rate of 3.1% annually, leading to a spike in production costs as they relate to labor. According to economists, if productivity continues to decline, it raises the risk of a faster than expected jump in inflation as unit labor costs, or the cost of labor to produce a single unit of product, increase. In a move that should have come as a surprise to no one, Greece opted to delay its €300 million payment to the International Monetary Fund that was due at the end of this week. Athens has apparently opted to move all of its payments that it owes to the IMF in June to the end of the month, a move which is allowable under IMF guidelines but only adds further pressure to Greece to come up with a set of reforms that will unlock its much-needed bailout cash. In a research note published on Friday, Derek Halpenny, head of global markets research at Bank of Tokyo Mitsubishi, said, "The non-payment is more a show of defiance and means the payments in June will be bundled together and paid in one sum of about €1.6 billion at the end of the month. This is allowed by the IMF, but is meant more for countries that struggle due to administrative difficulties to make numerous payments over a short period rather than for countries struggling to pay." The Organization for Economic Cooperation and Development issued a stark warning over the situation in Greece this week in its Economic Outlook report, saying failure to reach a satisfactory agreement between Greece and its official creditors would intensify perceptions of redenomination risk and uncertainty. The OECD gave further detail on its position, saying that a Greek default on its debt would most likely involve an aggravation again of financial fragmentation of the euro area, dampening real activity and restarting negative feedback loops between the real economy, the banking sector, and public finances in vulnerable countries. As signs increase that Greece will not be able to come up with a compromise that will satisfy its international lenders and unlock additional bailout funding, the risk that capital controls will be implemented in the debt-laden country continues to rise rapidly. As the funding crisis has drug out, Greek banks have been increasingly reliant on emergency liquidity from the European Central Bank for their funding needs. If the ECB shuts off the ability for those Greek banks to tap this emergency funding, the banks will be forced to begin limiting outflows of funds, which includes limiting access to customer deposits. Imagine the chaos in Greece if citizens are turned away when they try to withdraw their own money from the bank. Elsewhere in Europe, fresh fighting broke out around the battle-weary city of Donetsk in Ukraine this week. At roughly 3 a.m. local time on Thursday, heavy fire from tanks and artillery batteries were launched on government positions near a suburb just west of the city. Separatist officials blamed the government troops, saying they shelled the city first, while Ukrainian army spokesman Andrei Lysenko said the enemy is trying to advance. Ukrainian forces are holding off all the attacks. The ceasefire that has been in place since February has always been fragile at best, but the escalation in fighting will bring it to an official end if it continues. The renewed fighting comes just as the European Union is deliberating an extension of the sanctions against Russia over its role in the events taking place in Ukraine. Crude oil saw support once again for much of the week, but gave up any gains it had achieved on Friday as the US dollar began climbing after the release of May's non-farm payrolls report. OPEC concluded a meeting this week and agreed to keep production at current levels for at least another 6 months, which also helped out downward pressure to oil prices on Friday. The euro climbed against the US dollar for most of the week, but plunged sharply on Friday following the release of the non-farm payrolls report in the US. The plunge appeared to be short-lived, and the euro still looks set to close the week higher against the US dollar. The Japanese yen continued to show weakness against the US dollar this week, moving essentially sideways in a series of spikes and plunges. On Friday, following the release of the NFP in the US, the yen was sent plunging sharply lower against the US dollar and will close out the week there. Volatility should be expected to continue. The non-farm payrolls report in the US seemed to steal the news spotlight this week despite the report that Greece chose to postpone all of its payments due to the International Monetary Fund in June until the end of the month. A cursory glance at the NFP showed continued improvement to the US economy as 280,000 job additions took place in May. A deeper analysis of the data in the NFP showed some troubling trends, however. Despite the addition of jobs, the unemployment rate ticked higher to 5.5%. Productivity levels continue to be low, which essentially means that the cost to produce goods is increasing as workers become less productive, a situation which could lead to a spike in inflation, according to economists. In a research note, J.P. Morgan economists noted, "This is the worst 5-year run for productivity since the early 1980s, and the worst 5-year performance on record outside of a recession." While the mainstream media was crowing over the latest jobs report, Greek Prime Minister Alexis Tsipras was giving a defiant address to Parliament. Mr. Tsipras said, "The proposals from the creditors are clearly unrealistic. The Greek government cannot consent to unreasonable proposals that call for devastating measures for pensioners and Greek families. I want to believe that it was a bad negotiating trick." The address was in stark contrast to his attitude when leaving negotiating sessions in Brussels earlier in the week, when he suggested that they were nearing an acceptable compromise. The proposals that Mr. Tsipras was referring to in his address were apparently taken from a 5-page document submitted by the Troika to Athens for review, which called for selling off some state assets and maintaining labor reforms that were a forced condition of the original bailouts. Athens has been reversing many of the previous austerity-based reforms in piecemeal fashion since the left-wing government took office, and any suggested return to those austerity measures will likely remain a sticking point in the negotiations with Greece's creditors. Tensions between Ukrainian forces and the Russian separatists that occupy much of eastern Ukraine exploded again this week, despite a fragile ceasefire that has been in place since February. As usual, each side is blaming the other for the flare-up and renewed fighting. We will have to wait through the weekend to see if the fighting in Ukraine escalates into another ceasefire breakdown. On Thursday, the International Monetary Fund noted that the U.S. Federal Reserve should push back any consideration of raising interest rates until at least 2016. In its annual assessment of the global economy, released on Thursday, the IMF noted that deferring rate increases would provide valuable insurance against the risk of disinflation, policy reversal, and ending back at zero policy rates. Now that the NFP is out of the way, news in Europe, Asia, and the Middle East are likely to move back to the forefront of next week's news. As always, it remains important to monitor global news events for items which could send the prices of precious metals higher from here. Taking advantage of buying opportunities to add additional physical precious metals as part of a well-diversified investment portfolio remains the choice of the wise investor. Remember that precious metals should always be viewed as a long-term investment, and that the key to profitability through the ownership of physical precious metals is to actually acquire and own the physical products and to hold them for the long term. Always remember that you should never overextend your ability to maintain ownership of your precious metals over the long term. The Precious Metals Week in Review, June 5th, 2015. Brought to you by Precious Metals International.